The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome to the show. I like the setup at TFNN so much I decided to replicate it in North Carolina. Just kidding. Still in Clearwater here. And we're going to take a look at our charts in just a second. If you've never been down here, this is a really, really nice setup they've got down here in Clearwater, and it's a great city to come to. There's a lot of folks down here right now, seemingly with the impending spring break situation on the horizon. So the hotels are not cheap right now, but what a fantastic place and scenery and a break from the cold. So now here we can access our charts, and we're going to take a look at something really quick. For starters, we're going to take a look at our S&Ps, and talked about this yesterday afternoon a little bit on Tom's show, but wanted to kind of reiterate a couple of things before we get started, which actually will have a bearing on some of the stocks that we look at. And we're taking a look at our S&P 500 futures chart on our dailies. We're going to just kind of verify something here, just as we normally do with our closes outside of profiles. Those powerful setups are retests of those inflection points. And yesterday afternoon, or yesterday during the day, we reached a low of 20.9975 on the pullback after the close above this 20.9950. Missed it by a quarter of a point on the unfair highs there, which are at 20.9950. And when you have breadth in your favor and you've got a retest after a close outside of a profile, those are relatively strong, high probability setups to trade support in the direction of the trend. That would be your trigger point basically on buys at 20.9950 or in that general neighborhood as we reached 20.9975 yesterday. But also, if we get a complete exploration of this profile down into this 2074, 2072. Why 2072? Because of those weekly unfair highs that are on the weekly. So that's going to be major support, but we're going to have to pay attention to what's going on with our breadth information all along the way. And if you want to know what our breadth information is doing, grab the scanner. You'll be able to see it real time. And here it is. Had the 60s flip-flop a little bit yesterday, but the stronger indications are usually on the longer term. And as we talked about yesterday, looking into some of the strategies as proof of concept based around breadth and profiles, they bore themselves out pretty well over time, and the probabilities being over 50% and combining risk reward at least 1.5, 2 to 1. It's not a bad way to look at the markets from a technical analysis standpoint. So as we move forward, let's cover a couple of the usual suspects. And what do you do now in the S&Ps before I leave this? You got to be looking at stops below 29.950 on the moves north still. And if the breadth changes, we're going to start taking a look at possibly a relaxing type situation, as we did there at 2093.65 down into 2082.85 the other day. Now I know these are short-term blips in the marketplace and a long-term trend up. So again, if you're going to be shorting this market or trying to short it, I think you need to just sit tight and wait for some information to change. And as of right now, if I'm short, I'm kind of terrified, and I don't want to see these charts acting the way they're acting right now. And that's one way to throw another piece into the puzzle. We're going to take a look at the dollar really quick. Again, this is something, the gift that keeps on giving on the north side, stops below 93.67. Just to update that, we're going to go right into the DAX really quick. And we talked about it's not the time to look at this from the short side either. This is a long play with stops below 10,974 on an intermediate basis. On a short term, this is our 240s. And as we look at this, as you can see, not a lot of information and not a lot of reasons to start looking at this with any type of leverage towards the short side. So we're trying to block that side of the marketplace out. And again, if you're looking at this from the long side, you get stopped out based on your appetite for risk. That's the way trading goes, and you've got to be willing to just lose a little, lose a little, lose a little, make a lot. So let's take a look at the NASDAQ just to pick out some numbers here. Talked about there's nothing at all. This thing's up in the ether. I don't have to tell you this. Apple and a couple other components have been carrying this thing severely north. So we want to kind of look at the breadth situation on the NASDAQ and see if we can find anything. I'm going to go to the NASDAQ on our scanner, and I'm going to look at our breadth. And as you can see, we're very, very breadth positive. That doesn't mean this can't turn around. But as we look at our breadth and we look at our admin version of this scanner, we're going to go into our NASDAQ and look at no new boxes attempting to appear anywhere on the weeklies or dailies. Not a lot of stocks trading below profiles on those 100 stocks in the NASDAQ. And as you can see, you can kind of look at those numbers and do a little bit of analysis for yourself on that. And that means that the pack behind those leaders is actually still moving forward nicely, and there's no disconnects there. And if you're thinking about going short, I hate to tell you all this, but it's just kind of, that's the way it is right now. And we're just going to have to sit tight. On the short term, and by the way, up in here, if you're thinking about putting on some long-term NASDAQ trades at this point, I think you need to just sit tight, wait for a new profile to appear, just like we had our profile on our S&P appear. On the very short term on the NASDAQ, this is the situation. Just to pick out some numbers. Got a really, really, on a relative scale, thin profile that's just appeared the last 4 hours. Those unfair highs on the short term, 44.45, and on the bottom, 44.31. So I think any type of breakdown to be used on the NASDAQ, you're going to have to wait until this 44.30 area gets breached, and then it might be time to get in the water on the short side on a contra trade. But I mean, that's again trading and planning totally against the odds right now, and that would be not the highest probability situation to get into. So the sum up the NASDAQ, we just want to wait until a new profile appears, and that hasn't happened, and that's the way that goes. Let's take a look at the Dow. Don't look at this too often, but again, a very similar situation to the S&Ps. As you can see here, 18,038 is the level up top on our profiles, 17,872 down below. So, we had that close above, just like the S&Ps, retest on the Dow. So stops can be oriented on the long side below 18,038, 18,038. That's on our Dow futures. Okay. Let's take a look at the Shanghai. What happened overnight? Literally scary. This thing keeps going north. We've talked about eliminating the short side of this. That leverage point, 32.29. And just to let you know, Asia's starting to break out again above profile, so keep that in mind too. We're going to take a look real quick at the FTSE. Again, somewhat Euro default dependent. Not default as they're going to default, but by default, looking at the Euro constantly. 67.97 unfair highs. That's going to be where you put stops below on that one. Let's take a look at that Euro while we're talking about overseas. Still the same situation, 114.47. Intermediate long-term stops. Intermediate long-term stops need to be above there, and then I think you've got an incredible opportunity if the Euro somehow pops up into 116.79.80. That's where you might be able to back the truck up on the short side. We're still looking at this Euro from the short side with the bottom of the range right now, 112.45. Let's take a look at the British pound, because this has been a little bit of a disconnect here without question. And here's the long term on the weekly. And as we had that close above that unfair, this is our long term, and this is actually, first technical damage we had last week and a half on this, above 153.70. We're still hovering above there. That's where you're putting the stops below on the long side, and 153, let's call it, sitting down here on the dailies. So you got 153, 153.70, a rocker arm for this to possibly move higher, and there's no reason to get into the short into the pool, so to speak, until we get below that DMZ. The yen, this is something we've been talking about, waiting for the breakout out of this latest profile. The reason I'm pulling it up is because we are starting to nibble and get above that unfair high, which we've talked about at 119.40. Let me just pull this up over here. 119.44. We're trading 119.52 right now. So you could get in a little bit early on that. We talked about just blocking out the short side on this thing forever, and now you've got some reasons to start getting back in this trade, as we had bought some support areas, 118.06 down below. Now you've gotten the breach on the upside. So the buy points on this were 118.06 and breakout points above 119.44. A close today above this area would be super, super powerful for this to march forward again. So that's the way we're looking at the end. We're going to take a look at gold and silver really quick before the first break. Looking at the April contract on gold, looks really sick. Nothing to glean information off of down here. In fact, that was pretty powerful that we reached that 1222 area and just didn't want to go even back up into the fair auction area up there. So gold is just drifting around down here. I don't see any reasons whatsoever right now to step in with any conviction whatsoever to start buying gold right now. We're going to take a look at silver. How much have we transferred out of the March contract? Somebody in the den maybe can tell me. Let me do this. Let me blow silver up a little bit here. I should get into April, right? Okay. Yep. No. See, I've got my continuous still on March for E-signal. E-signal still got us on March. All right, we'll confirm that before we come back, and we'll be back in 5 minutes, guys.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And I think we're good now. All right. So we were talking a little bit about silver before we left. We're just going to mow right into that March contract really quick here. I was concerned that we had flipped over, but somebody says it's 2 days. And we'll take a look at the 30-year in just a second. Let's take a look at silver. Again, here's the kind of the low point of the move, possibly 1581 still. Don't see any reasons now at this stage to try to buy this until we get back above 1665, 66, or down into that 1580 area. So as we look at silver where it's at right now, we see an orange bar trying to appear. That means we may have a new daily profile. And I think the best case scenario would be if that daily profile unfair low would be very similar to this 1581. Then I think you could pick a battle down there. Right now we're just kind of, could look at this as an accumulation time down into that 1581 on the long side with stops down below. But right now, that's the floor on silver, and you got to pay serious attention if we breach that floor of maybe stepping aside on the long side. So again, if you're looking at it from the short side, I still think you're in no man's land on that slant also. So silver, I think this is kind of a wait and see. Let's take a look at the 30-year really quick. And here we go. All right, so we got 128.04 sitting there, and that's the 10-year. I'm sorry. I always do that. Let's take a look at the 30-year. All right, so we got the new profile on the 30-year, and we talked about, here's the long-term view on the weekly. We talked about, we've had that, as John had identified for me that 8-handle move down into that inflection point, 144.08. And, is it time to continue to stay on the short bandwagon if you've caught some of that move down? And that was a, and I'll kind of review the process a little bit here, but, now we've got a kind of a floor put in here, and we've also got a new profile that's been put in, and that 144.04 daily unfair low, as you can see now, is very similar to that weekly. And I'm just flipping around here, going from weekly to daily, if you're not looking at the screens right now. So 144.04 and 144.08 on the 30-year on the March contract. And the highs on that new profile are 145.28. Let's just call it 146. So right in the middle of a profile. We'd love to see this thing come down and retest this area or break out above 145.28. And that's the situation on the 30-year right now. So again, this could be looked at as accumulation area for long-term possible buys with stops down below that 144.04 area, if that makes sense. Okay, 10-year. Not quite. Let's see. It's hard to read the screen and talk at the same time. I'm from North Carolina. We're going to take a look at the 10-year and look at this as 128.04 sitting up there, combined with that 127.24, 27 down below. So that general neighborhood, we've got to go one way or the other on that. And I'd like to see this 10-year get back above the 128.04 area for a breakout, getting through all this congestion, and finally having a close above that 128.04 area just to start looking at this from the long side again. Remember, on the 10-year, we tried to pick some battles here as we had kind of come back, as we had rotely just gone through the process of buying support, buying support, buying support on the 10-year all along. And then we kind of had the fundamental stuff out there that was overhanging. Markets going to all-time highs again. I still think this product's holding up great on a long-term scale, and any type of S&P down move, is more than likely going to jack this thing up. You've got global rates situations on your side, like Tom was talking about yesterday, actually. But again, 128.04 is going to be the kicking point to close above to start really getting back in the water on the long side on these treasuries, especially the 10-year. Okay? We're going to take a look at soybeans right before the break. Got about 20 seconds. Just want to get this in. New profile, again, appearing on beans on the daily. And that lid has already been met at $10.12 a bushel. So we're going to talk about this a little bit more after the break and then get into some individual stocks that are in the news. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Just run into a couple of things for some questions out there, and we want to take a look at some of the leaders in the NASDAQ. Apple. We're going to come back to beans in just a second. Soybeans. So we're going to take a look at Apple here, and we talked about, and again, this is the, whoa, amazing. This thing carries quite a bit of weight in the NASDAQ, as you guys know, and we talked about, no stock is too high. This is a great example of this, and we talked about not being a hero and trying to step in and short this thing as it may have been too high in someone's eyes. And because we didn't have any new information appearing up here, there was zero reasons to try to short this thing. And now we got that crazy move up here. And pre-market, we're still hanging in there, 132.62. So the only thing that you can kind of look at now to get any new information is we're more than likely going to have a new profile in the 240s. But as you can see, going back in time, these 240s have regulated this trade up quite well. And the only thing that we can hope for to even get long again is to try to wait for some new information on the 240s to appear, and that will be delivered in the scanner. Okay? And I'm going to show you that in just a second. Let's go back to soybeans really, really quick. Some guys were asking about Apple. So I thought I'd hit that really, really quick. Let's go back to soybeans really, really quick. As we look at March being still in soybeans, I've been relatively bearish on this on the long term. We did get that big move down from 1050, 1060, broke above profiles, have to call it quits at that stage. new profile, new inflection point, possibly a new leverage point at $10.12 a bushel. And it's a very, very wide profile. What does that mean? That is enormous, actually. 971 up on a daily up into 1012. So as we look at this, we may have a decent ride down if you can catch this right. Stops above, still looking at this as it may explore that daily profile. We're going to take a look at Netflix. And pre-market we're trading 472. The reason I'm pulling this up is because the scanner told me we might have a new profile appear here. That's going to give us some new inflection points to pay attention to on Netflix. And do I think this thing's going to continue to go up, continue to buy sport? We got to keep looking at it that way till we're told differently on any kind of type of technical damage. Now, the interesting thing is with these Apples and Netflixes of the world, on a relative scale, we looked at the NASDAQ internals, we looked at the breadth on the NASDAQ, and quite a few of these stocks have carried the entire index up. And I was looking at something on CNBC, in fact, and they had pointed out, which we can look at in the scanner and find out a lot of these things, but as we look at some of these leaders, they basically 5 stocks have carried the entire NASDAQ up this year for higher percentage points on the index itself. So what does that mean? That means that, and as we looked at the scanner, and I'm going to pull that back up, what that means is, and I'm going to try to get to what I was going to show you. Okay, here we go. What that means is, as a lot of these stocks are starting to or have confirmed and are trading above profiles on our intermediate, and I'm just going to focus on our intermediate for a while, it's really weird that we don't have any new boxes attempting to appear up top, any down below, and we've got a pretty static situation that's been in force for a while. So, these leaders could turn around and bring the index down, but the fact of the matter is you've still got really, really good breadth on the NASDAQ itself, all right? And that means that even if you're listening to CNBC, I guess is what I'm trying to say is, and thinking that, if these stocks turn down, that's going to drag the index down. That's a fact because they're a high percentage of the index, but you've got to look at the overall, because what we're looking at is we're looking in a non-weighted fashion. Remember, we don't weight these things for calculating breadth because we want the true, tie to the market. Are most of the stocks coinciding with the leaders? And at this stage, they actually are. So keep that in mind. It's just something to pay attention to, that we don't have any big disconnects going on right now, and we haven't had any big disconnects going on right now because the leaders have just been outperforming some of these stocks, but they're all on the launching pad as far as still being breadth positive for the most part. All right. We're going to take a look at Home Depot. This is a stock in the news. And pre-market right now looks like we're trading about 116. So here's our weekly. We knew it was okay to be long, not okay to be short on the long term. And those long-term stops were to be below 106.66 and below 100. But looking at the daily, now that we're up in the 116 area, yesterday's action, let me just pull this up here. Yeah. Yesterday's action, obviously coming back to that inflection point, no long-term technical damage. And then you get this morning, if you're out of the market, what do you do now? I don't think it's a great time to buy this thing, pre-market or even on the opening, as we've gapped up significantly in a strong stock, in a strong market. You're going to have to, again, wait for some new information. And we're going to be trading, my chart doesn't go that high. Hold on. Well, it won't let me pull it down. Whew. That's how high it is. So 116 way up there. We're going to just have to wait, sit tight for some new inflection points on Home Depot. And here's the 240s. Similar situation, nothing to glean off of up there. And you don't want to be the high print for the year, going in there and doing something as the chatter on the TV is going to be about this Home Depot stock. We're going to look at Toll Brothers as we wait for this to come up. Good news on that one too, 38.78. Let's just call it almost 39 this morning. Here's the 240s reflecting those real prints. Here's the long term. Again, has been not a lot of reasons on the long term to go short. We had breached some profiles yesterday, but coming into an earnings announcement, anything goes, and this closed below. First technical damage on this in a while. We always talk about, from my opinion, that maybe sitting on the sidelines before some of these earnings announcements is not a bad idea. I mean, I just remember Kramer one time getting everybody into John Deere. This was a couple of years ago, or maybe 2 years ago, right before the announcement, and talking it up, and then everybody got impaled for about a 10-point move down, if you can remember that. I don't know if you're in the market back then, right after the earnings, and I don't think he talked about it again. So beware of earnings announcements. It's always good to, if you're trading on a certain time frame, long term, then you're going to have to just kind of weather storms with that as far as that goes. But from a trader's standpoint, I don't think you can gamble, because these stocks can do anything when these earnings come out. Okay, I'm going to take a look at IBM because I want to see what's going on here this morning. 163.14. I'm still thinking that this stock is obviously in a long term showing its hand. You're looking for areas to short. That was obviously a little bit of a stop out for me coming into this inflection point. We kind of hope that we get up there. Now we've closed below it yesterday. I still think this is a ripe opportunity on the short side. Haven't changed tone on that, but you've got to wait and pick your battles at certain areas on this. We're going to take a look at the Nikkei really quick. This is something, again, live half the year in Asia. Yen coming down a little, or getting devalued a little bit today. We got to, figure that this is another default rise, repricing in the Nikkei. This is nothing to fight. You got the Japanese central government still sitting in the background, devaluing the yen, wanting to devalue the yen, and by default, this Nikkei. This is, we've had some great government intervention trades, I will call them, this past year, and this is one of them. And do not stand in the way, as you should not have stood in the way of the Treasury march forward based on Big Mama and a couple other people sitting on the bid forever. This is one of those things. Similar situation. Don't try to fight it. We're going to go back into, I'm going to look at the Euro Swiss. That's the US Swiss. This is the Euro Swiss. Don't look at this that often. Hold on 2 seconds. Let me get this off my screen. Don't look at this too often because we had that big, just mega situation that almost took FXCM out. And by the way, I went and signed up for a trial on FXCM the day after that happened. I was just wanting to see how rattled that company was. I mean, I'm not laughing about the company having problems, but I just wanted to see what they were going to do. Gave me the demos, called me, texting, emails, blah, blah, blah. And, in fact, I got a voicemail from them yesterday. Hey, it's time to open your account. So the Swiss franc was the big moniker that just kind of came in and buried that company when the Euro Swiss franc disconnect happened. But right now we had a new profile appear yesterday on the Euro Swiss franc, and now the new leverage point for this is 106.64, and that's where I'm orienting stops below now that we've got a profile to focus on here. Got our navigator doing some nifty things down here to possibly cross zero too, so I wanted to just point that out. I want to put out the numbers. I always forget to do it. TFNN gets on me. Toll free 877-927-6648. Internationally 727-445-1044. I know a lot of guys on eSignal are watching this show overseas. Feel free to call in. Maybe we can give some information on some instruments that you guys may be looking at. All right, now I'm going to go back into the scanner really quick, and I'm going to get my S&P breadth up. I'm going to go in here, I'm going to block out what I was looking at with some ETFs. I'm going to go into the S&P 500. We're going to wait for this to load, and then what we're going to do is we're going to do a little bit of a filter here, try to figure out some things that may be able to be looked at. And we put these charts in yesterday, but we're going to continue to put them in. Hang with us on that, along with these paragraphs that I've been promising forever, but they should be in this week, or I'm going to lynch a programmer. So we're going to look at our daily below. We're just going to try to find stocks that are not cooperating. And as they load, we're going to go in here and look at a couple of things that are on the radar screen as far as what we're looking at, and we're trying to find stocks that may be showing weakness in a very strong market to try to use some of those inflection points in case the market does turn down. We're going to try to leverage against some stocks that are showing their hand on the weak side, and also where to pick the battles on those stocks. So what this particular product does really for me is it just kind of gives me trading ideas, and also gives me the landscape of how I might attack that trading idea from the short side in this case. So don't have a lot of stocks, obviously. I think we've got about, let me just go back in here. Let's see. 43 stocks. We had about 53 yesterday, still trading below profiles, but still have 43 on our S&P 500. And as we look across the board, the Chevrons, Conoco, Chesapeake Energy, there's a lot of energy stocks in here. And that's because crude oil is obviously relaxed a little bit. The XLE, I still like that as a long based on inflection points we talked about yesterday. We'll look at that in a little bit. But as we look across the grid here, let's take a look at Walmart. That's in the fair auction on the long side, but on the intermediate, we're sitting right here with inflection points 89.26, 84.99. So let's take a look at Walmart really quick. And as you can see, as we pull up Walmart, weak stock in a strong market, especially lately, 85 is that inflection point. And as we look at this, let's see pre-market where we're at. We're trading about 84.62. So in my opinion, if you do have a market downturn, this is going to be one of the stocks on my radar screen with a nice inflection point that's been provided here around 85 on the short side, so you can orient stops below. This is possibly not a long-term slant on the stock, but just a trading opportunity. Question, I don't know what time Yellen is speaking today. I'll find out on the next break and hopefully give you guys that. As we look at a couple other stocks that are on the radar screen as far as short opportunities and defined inflection points, let's take a look at, I hear the music, we're going to come, it's a little bit early, we're going to come back in 5 minutes and cover the last couple of things that might be on the radar screen from the short side in case we do have a market turn. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Yellen is speaking at 10 o'clock, and you know, I didn't make a big deal out of that because she seems to. I mean, what is she going to do? She's going to tell you that everything's going to be okay, and we're going to assess things, and what, you know, the rhetoric she always uses. And consumer confidence is also at 10 o'clock. So again, that's something to just be wary of as far as the S&Ps and bonds and notes goes, and just kind of waiting and trade the reaction instead of the action on that if you're doing some intraday trading. Here's Tesla. Similar situation here to Walmart. You know, on the scanner, showed its hand, had a pretty big sell-off yesterday. Good Lord, what was that? Was that 10-point sell-off yesterday? So now we're looking at below profiles again, poked our head above, got back down below. That's what stops are for. If you were looking at it as alongside, it was getting back in the fair auction. Now we got to look at this from, again, the trend is down the short side. Here's the 240s, 207.80, excuse me, 207.91. Let's call it 208 on the 240s. Are there better stocks to buy right now? We've talked about that. Yes, there are. Even though I like this company, you know, they're going to have now, seems like massive competition coming into play, even though they, in my opinion, have their act together. Not the best stock to look at from the buy side on the long term as far as technicals go, because the U.S. stock market has been marching forward north, and if we ever do have a downturn, this is going to be one you have to pay attention to using those inflection points. I'm also going to look at AT&T. Make sure T. here we go. Close below. Big important trade here, 33.94. We talked about that was going to be the level. Somebody called actually a while back, and we talked about, trading the inflection points on this particular stock. It's pretty much, dividend play for a lot of folks still, but 33.94, we're still in that neighborhood. Trading pre-market 33.85. So again, I would consider this still a little noise here. If you started looking at this from the buy side, I don't know if you need to call it quits yet, but as we've looked at, again, the relevance versus the market lately, obviously this is not outperforming. And again, if that market does turn south, there might be better opportunities on the long side than this, because we've had a little bit of a pullback here, as you can see. Do I think the market's going to turn south? Based on everything we talked about at the beginning of the show, the leverage is still towards the long side. The AT&T has pulled back into the bottom of the fair auction. You've got to take that in consideration. And I don't think you can look at this as calling it quits yet on buying the bottom of the profile and a pullback on AT&T. This is kind of noisy right here, and may want to give yourself a little bit more room, maybe below 33.50 on AT&T to call it quits. It's a relatively low-risk trade at this stage. Let's take a look at Duke Energy. This is something that, as we look at this, had been hanging in there, but now, since we broke down below the weeklies and now we're trading below profiles on the daily, 79.58, we're going to have to cross that border to get back long this, and we're still hovering below these profiles on Duke Energy. Those are the inflection points to pay attention to, and they're also provided right here in this scanner as you mouse across, and you can see this landscape view to kind of keep all this in mind. As you can see below, broke down below weeklies, now we're sitting below daily profiles, and again, not the strongest stock to buy in a strong market. We're going to take a look at Staples. Hear the music, we can't go into that. Guys, you've been great. We'll pick it back up again tomorrow. Steve Rhodes is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.